this special edition Kraken live stream. A new all-time high is here. So what's next? To discuss, I'm joined by Dan Held, the growth lead at Kraken. Dan will be joining us shortly to discuss his outlook on the Bitcoin and cryptocurrency market for today, November 30th, 2020. But first, some quick data highlights from Kraken.com. At $19,600, Bitcoin has spent exactly 0 days in its 12 years of trading history above this price. This means if Bitcoin closes at or above this figure, it'll mark its highest ever daily close. Elsewhere, Bitcoin is up nearly $1,500 on the day and is up 7.8% over the last 24 hours. This comes just days after dropping to a weekly low around $16,300. Finally, in context of the macro markets over the last year, Bitcoin is now up over 150%, outperforming gold and the S&P 500. Once again, you can download the latest Kraken intelligence at blog.kraken.com and see our data there. Now our guests, welcome Dan.
Thanks for having me, Pete. And I wore my special sweater today. It's my Bitcoin tacky sweater. I don't know if many folks have seen this, but in the last bull run, this was a very famous sweater that was created. Today's an amazing day.
There.
Today's an amazing day. We've waited 3 years to see Bitcoin rebound from its previous highs. Pete, you and I have been around a long time, and we've seen multiple of these cycles back in 2013. And folks forget that there was 2 of these back in 2013. 2 times in 2013, 1 time in 2017, and now again. So I think it feels super exciting for all the Bitcoiners out there to see the Bitcoin price rebound. It's just incredible to see the strength of Bitcoin in 2020 with all of these different macro events that are occurring. So it's a very proud day for all Bitcoiners.
I definitely agree, Dan, and wanted to start in there and really kind of dive in about, what it means to you as someone who has been promoting and evangelizing for Bitcoin. Obviously, never easy to have conviction in something that is innovative, never easy to, keep your conviction when something, or an asset is as volatile as Bitcoin has been over the years, though certainly we can debate that point. So I guess, maybe you can just walk us in, obviously celebratory mood. What were your thoughts as you were watching the price go up today? Did you think we would see it this soon? Again, not even in 2021 yet, but of course, a lot of factors, as you mentioned, propelling Bitcoin, a lot of tailwinds.
Yeah. So with this rebound off of a bear market, so we're kind of shaking off that. We're waking up from the cold winter. We're shaking off that snow, and we're the summer is starting to set in, the Bitcoin summer, and with this bull run, it's been really interesting at the start of this bull run because it's been a near vertical setup from 10,000 to 18,000 was almost without any pullbacks. I mean, very, very small ones, but you and I have been around longer. And when we saw those sort of, elevator style price movements, we typically see like a 20 or 30% drop a few times along the way. And so, yeah. And so, for us, I think it's really interesting to see this one where I believe that a combination of education, so there's much more content now to help people understand why Bitcoin matters, why it's valuable to them. And so I think, for the educational side, we have much stronger conviction. So when the price moves quite a bit, you've got tons of great thought leaders who have tons of great content in video, text, and audio format. I think there was only 2 podcasts in this space back in 2016. So there's so much more conviction, which I think that means every time there's a small pullback, these hodlers or believers in Bitcoin come in and buy the dip quicker than before. That in combination with the institutional money flowing in. So we've seen a ton of institutional flows come into Bitcoin, and those type of traders are a bit more seasoned. They're not your typical retail trader who is speculating with their own hard-earned cash. These institutional folks are speculating usually in combination with their own money, but largely with LP's money. And they have rigorous models, and they have strong conviction when they invest in something. They have a certain hold period for it. So I think we're seeing a totally different market dynamic, and that's why we haven't seen a really strong dip. I think the dip a few days ago, I think that was 17% or something, which I would consider a pretty minor dip compared to the ones historically.
Mm. So yeah, Dan, you mentioned something there, education, and I wanted to center in on that. Obviously, Bitcoin is new, it's innovative. We're building this economy that is really only just a little bit over 10 years old. Obviously, as you said, we know more about Bitcoin now than we did during the last cycle, and obviously, that's led people like yourself and myself and others to develop a deeper conviction in the technology. So can you give people an idea of, what did we learn over this time, right? So people who maybe have checked out when Bitcoin was at all-time highs last time, they're checking in now. What are the big differences that you've identified into just how we understand the technology?
That's a really great question, Pete. I think there's a couple different factors. One, on the on the overall objective or utility of Bitcoin, I think there's been a Schelling point around the store of value gold 2.0 narrative. I think before there was this tug and pull, and this was manifested in the Bitcoin Cash hard fork wars, to where there was conflicting ideology. Now I would say it's largely Bitcoin gold is gold 2.0. Now, this was my original investment thesis back in 2012. When you look at how Bitcoin's architecture works, for example, you have a limited amount of block space, which means that when transactors bid to get their transaction into the block space, if there's a ton of demand to transact using Bitcoin's block space, which is great because you've got Bitcoin's finality guarantee. You trust that when you send the payment, it won't be reversed. Now we look at the structural dynamics of how the Bitcoin's blockchain works, and it's fully apparent that layer one won't be useful for day-to-day transactions. As we see fees, aka demand, increase to transact in that block space, that fee pressure will inevitably outbid any sort of lower value transactions. So before, I think that was two conflicting narratives. I think Bitcoin store of value is the only narrative, and that's due to folks really understanding why Bitcoin's valuable and what utility it serves. So there's that. I think there's other dynamics like Bitcoin security model, which plays into the block reward as well. I think that's a little bit boring to dive into, but I think people talked about it a lot more than they did historically, and they dug in a lot deeper there. And then, I would say like the understanding of Bitcoin's social contract, of how the monetary policy is this brilliant innovation, which is hard coded in Bitcoin's code. However, if the aggregate Bitcoin or hodlers decided to change it, they could change it. Now, this is an extremely improbable event. It's less probable than, say, central banks going back to the gold standard or an asteroid wiping out Earth. I would consider it so rare it's not even really worth bringing up. But people started to understand how blockchains really worked and how Bitcoin's blockchain worked, and I think people finally realized how complicated governance is, and how especially with the alts and the rise of ICOs. And seeing kind of that graveyard, I think there's a lot of learnings from what didn't work and then Bitcoin with what worked. So I think both on the technical level, but also the the social connectivity to that technical level, I think was really, really fleshed out over these last 3 years.
Yeah, I would echo that, and I would say the big contrast now, I think, is the understanding of how Bitcoin is designed contrasts with central banking and the kind of policies we've seen there. But I wanted to just note something I was reading today. I'm not sure if you saw the Bloomberg piece by Niall Ferguson yesterday. Obviously, something that a lot of investors are likely reading. Seeing that there's sort of a historian and an author who's now championing Bitcoin. I thought it was interesting that he still brought up some of these negative points that you mentioned. He still brought up the transaction narrative where Bitcoin, maybe not as useful for spending on layer one, as you said. He also brought up, mining or proof of work. I think some people in the industry, like myself or yourself, become very convinced about that. But he sort of placed himself more as a skeptic or pessimist in that area. Are you surprised to see that, even some of the more bullish bull cases for Bitcoin, they're still kind of presenting some of these narratives that you mentioned where, maybe not as favorable or fashionable as they were?
Yeah, no, I think this is completely expected. None of us went from zero to full Bitcoiner in a matter of months, other than Michael Saylor. I think he's the rare person who's been able to go 0 to 1 that quickly. Now, I've stumbled and bumbled along my journey to really understand Bitcoin. I think there's different eras and epochs of how I understood it from its value prop level, but then understood the technical aspects. I mean, look, I'm not an engineer, so I'm not going to claim like I can actually go work in command line, but I understand the technical fixings of how it all gets put together. When people understand Bitcoin's value prop, I think that's much easier to grok now. People go, oh, it's gold 2.0. And with the macro trade, like the macro traders and the institutional types, this is a narrative they completely understand. They still may not understand the governance structure, the security budget, and how that plays into how Bitcoin's secured and how proof of work works. But it's not, I would say, like, at least they grokked why it's valuable. And then if they care enough, they'll go learn the rest. So I think it's completely to be completely expected that new folks in this space don't go 0 to 1. They're going to take a little bit longer. And I certainly hope I have the opportunity to talk to some of them, which I've had, we've had a Kraken webinar series with Michael Saylor. And I think there's going to be a lot of really interesting folks coming into Bitcoin this cycle. I mean, in previous cycles, it was basically the Winklevi that were like the most well-known individuals in Bitcoin. And by the way, I like the Winklevi. No, there's no ill will there, but I think we're going to see a whole swath of, you get like Chamaths and all these Paul Tudor Jones, and you're going to see a ton more come in. We're going to see now that the career risk has been de-risked, we're going to see folks and also the social risk, like appending your name and your brand to Bitcoin wasn't a good idea back in for its entire existence all the way up until now. But now that it's cool to do, I think we'll see a tidal wave of really smart, really big people come in. And like I said before, I'm kind of excited because it gives me the chance maybe to talk to some of them, and hopefully I can impart things like understanding of how proof of work functions and other things. So for me, I see it as a whole new field of people I can help better understand Bitcoin.
Yeah, of course, small but growing pool, but growing bigger by the day. And, with Bitcoin, there's always something more to learn, which I think, deepens the conviction of some of us in it as a technology. Wanted to also talk about, we started this conversation, you're mentioning, that we've developed this idea or this understanding that Bitcoin is cyclical, right? Its price and economy behaves in a way that's almost seasonality, right? You used summer or spring. There's this idea that because of the halving every 4 years, Bitcoin's economy, displays certain characteristics. I think, people who have followed this, who subscribe to this theory, there's an expectation that we're, now that we've reached all-time high, that we're going to see Bitcoin extend. Maybe can you talk a little bit about that and why you're confident that we will see Bitcoin not just hit an all-time high as we have, but that this is really just the beginning of what we can expect to be, a period in Bitcoin's economy where, investors might be able to expect returns.
Yeah, so look, past performance is not indicative of future performance. But whichever asset you invest in life, whether it be real estate, stocks, bonds, gold, Bitcoin, it operates at a very basic fundamental level. Will you buy it in expectation that more folks will find it to be valuable later? And that's the same thing for Tesla. That's the same thing for IBM or Berkshire Hathaway. So with Bitcoin, I think we have so much more upside to go because a very, very small percentage of the world has discovered how valuable Bitcoin is. Bitcoin is a tremendously valuable tool to store value that can't be confiscated and to transmit it anywhere without anyone intervening. This is an incredible, huge innovation that underpins the entire financial system. The value of Bitcoin is not 400 billion or 300 billion. It's 4 trillion. And in my personal opinion, this is not investment advice. I see Bitcoin's upside being much higher. I mean, gold itself is worth $10 trillion, and that's just gold. That's not fiat currency. That's not real estate or any other way to store value. So for me, Bitcoin is tremendously undervalued. A lot of folks make the assumption that, the per unit price feels expensive. I would strongly encourage people to zoom out and look at the market cap. The market cap is still less than Apple and Google and Microsoft. I mean, is Bitcoin more valuable than one tech company? Yes, I think I can confidently say that. And then here's a fun exercise. So folks in person have often asked me, Dan, Bitcoin seems expensive. I mean, it's $10,000, it's $20,000. And by the way, I've heard this since Bitcoin was $100. And I go, okay, well, do you know what a share of Berkshire Hathaway is? And they go, well, no, or some say yes, but a share of Berkshire Hathaway is like $400,000 a share. And I go, is that expensive or cheap? And almost everyone will say it's expensive. And the answer is it's neither. It's just the per unit price of the valuation of a company called Berkshire Hathaway. And for example, I could have one share of Dan Held coin, and that could be worth $1 million. But if there's only one coin, then the market cap is $1 million. Or I could have Dan coin be worth, very little, but there's a dollar, but there's a trillion Dan coins. So it's $1 trillion market cap. So folks, I think, often make that mistake where Bitcoin's market cap is the true metric to look at. And if we look at that, I think it's very undervalued.
Yes, you mentioned also the last cycles. Staying on this topic of the cyclical nature of the Bitcoin price, and the cryptocurrency market in general. So, I think during these summer periods, these overheated periods, we typically see a lot of new entrants. We see the rise of many other cryptocurrencies coming out with claims about what they will or won't do, and we see a lot of overhyping of new projects, and maybe some of the more negative aspects of those kind of market fears. Certainly in 2017, a lot of people remember the ICO boom, just the many projects that went to market there and delivered some returns for investors who were able to get out in time, or manage their portfolio accordingly. Do you think this cycle will be different? Obviously we're seeing Bitcoin be the leader so far, right? It is the asset that is climbing. It is setting the tone for the market. Do you expect that to continue, or do you expect at some point during this cycle that the value proposition, there will be narratives around the cryptocurrency market in general that will become appealing? What are your thoughts on that?
Yeah, so with the last cycle, Bitcoin had a lot of headwinds against it. It had the narrative of the Bitcoin Cash fork, which was payments related, and a good portion of the Bitcoin community forked off. And that, I think, was a very significant headwind. I think Bitcoin would have gone much higher without that anxiety and that worry about what might happen there. Also, Ethereum's narrative was very, very strong at the peak of 2017. The gold, or the ICO's fundraising platform narrative was, essentially Ethereum had all the appetite for ETH was tapped into buying ICOs. So it wasn't just like, for example, Bitcoin just has demand for Bitcoin. For Ethereum, it wasn't just demand for Ethereum, it was demand for every ICO. So it was like the aggregate demand of ETH was ETH plus 1,000 other demands. So that was a really interesting dynamic for ETH in that bull run. We don't see anything like that now. There's not really that ICO fervor that we had, and they've largely new ICOs have largely, I think, trailed off. There are still some new ones, but not nearly at the intensity that the last market bull run had. So I think those two were big headwinds against Bitcoin's narrative. Bitcoin's narrative has become the strongest narrative in the space of Gold 2.0. It is the reason why Bitcoin was built. So I think that narrative market cohesion will lead to a very interesting dynamic. That combined with the macro folks and the institutional traders finally understanding Bitcoin, this is huge. I mean, before this was a predominantly retail-led market. Now we've got massive infrastructure in place for the institutional folks, so they can, and they have hundreds of trillions of dollars that they manage that could flow into Bitcoin. And we're starting to see that. The herd is coming was the old saying back in 2017, 2018. They weren't wrong. They were just wrong about the time that they would come in. And so now we're finally seeing that happen. And then, on the retail side, we've got, so Kraken, we've obviously one of the biggest, largest, most popular exchanges in the space, but, you've got other places to buy Bitcoin too, like Cash App that weren't available before. These are traditional brokerage account style accounts where folks didn't have access. And again, I'd recommend that you go to Kraken to go do your trading and buy Bitcoin for the first time. But what I'm trying to say is that there's a proliferation of spaces or places available you can buy Bitcoin that fit within your existing brokerage account.
Interesting. And certainly want to speak to, before we conclude here, to the people who are coming in today and maybe just waking up to the opportunity the first time, re-engaging with the industry. You've mentioned this herd is coming, the institutional investors, are expecting to see significant inflows from, companies like MicroStrategy, as you mentioned before, potentially many of them or a few of them in this cycle. If you're a small retail investor right now who, feels like they missed the boat, what do you say to them? How do you start today on November 30th, 2020, your Bitcoin journey, if this is your first day?
Yeah, well, first of all, welcome. This is a kind of a wild, quirky space. I'd spend some time getting to know kind of the local architecture and the local culture. It's going to be a wild ride. You should be very convicted before you buy this asset. It's something that is very volatile. You're not going to enjoy the ride unless you are fully convinced that you want to hold this. Once you are, I'd recommend either a strategy of just, you could do fancy things like dollar cost averaging. Now, dollar cost averaging is mainly a psychological way to enter a position that minimizes FOMO and fear. So what you do is you buy a certain amount every week. So let's say you have $1,000 and you want to put it over, 5 weeks. So you put 200, you invest $200 in a Bitcoin every week for 5 weeks. That way, if it dips after you buy, you don't feel bad because you're buying the dip. But if it also starts to go up after you buy, you don't feel bad because you already have some. It's a psychological thing. Personally, if you're convicted in Bitcoin, you should enter your position today. I think there's a lot of ways you could wait and hope for a dip. Good luck. It could go higher. You buy then it dips. Who knows? If we look at Bitcoin's historical cycles, it doesn't just go 10% above the last time all-time high. It doesn't go up 2x. It goes up 10x or 20x over. So whether you get in at 19,000, 20,000, or 21,000, that doesn't matter too much, especially when you look at your exit price. Ultimately, you probably shouldn't think about exiting all of your position ever. You should look at hodling and what that brings you in terms of storing value through time. But if you're thinking about investing in Bitcoin, I think you should probably just make your investment whenever you are fully convicted in it. I've been around for 8 years. I don't know how to time this market. You and I have been staring at these charts for a long time. I can't tell you where it's going to go tomorrow. If you're convicted in it, I would just say buy it.
Yeah, I mean, it's a great point. I mean, I remember, I thought it was expensive at $50, expensive at $1,000, both quaint prices in retrospect. Well, thanks, Dan. Appreciate you joining. This has been a special edition Kraken live stream to mark Bitcoin's all-time high, new all-time high today, above 19,800. I've been Pete Rizzo, editor-at-large at Kraken. You can find more great Kraken video content on our YouTube, LinkedIn, Facebook, and Periscope channels. Until then, we'll see you next time. Happy trading.